How can you be on top of your numbers and still feel like the ground isn't steady? You meet your targets, you close your cases, you write more policies, yet when the adrenaline wears off, there's a voice asking you, why doesn't this feel like peace? Income, especially commission-based income, doesn't automatically translate to security. As an agent, you've been taught to focus on production. More calls, more meetings, more follow-ups, and that hustle does generate revenue, but there's an invisible factor working against you: earnings volatility. Researchers at JP Chase found that hourly and commission-based workers experience month-to-month income swings somewhere around 9%, with bigger drops or spikes around 21% occurring about 1 in every 4 months. If you think about that, if your monthly take-home shifts by 9%, even small miscalculations in spending or saving become destabilizing. And so those swings often have nothing to do with your effort, but they are triggered by external factors like market, changes in demand, or even scheduling. And so in the insurance industry, the stakes are even higher. There was a survey of insurance professionals that revealed that 88% report feeling stressed or anxious. Nearly 8 in 10 have sought mental health support. And if you're a younger professional between 18 and 44, that reports even higher stress levels. And roughly 3/4 believe mental health challenges aren't discussed enough within their organization. It's not just the commission structure, it's the emotional load of carrying clients' fears and the unpredictability of the market. So if you add to this general financial landscape, 43% of workers report feeling financially unstable. 29% have less than $500 for emergencies. There's 37% that could only meet expenses for a month if their income stopped. That fragility doesn't disappear with a high commission check. In fact, the higher the income, the more pressure there is to keep that lifestyle going. If you're a woman in your 30s or a former athlete stepping into the business world, I can tell you that this volatility probably feels even sharper. You see, women live longer than men, but often pause careers for things like caregiving, which impacts long-term earnings. Athletes, they're facing a compressed earning window. Once the whistle stops, so does their paycheck, and there's no structure. So it's easy to mistake a strong month for stability and a slow month for failure. So you might be asking, why is this issue so important? Well, instability breeds anxiety, and anxiety drains creativity, health, and relationships. For many agents, the lack of structure creates a relentless cycle where you hustle, you earn, you spend, and then you repeat. Each good month brings relief, and each slow month, well, that triggers panic. And that roller coaster forces you to make decisions based on fear rather than wisdom. Economic volatility doesn't just affect numbers, it also affects your nervous system. So if you've ever felt your stomach tighten when you check your bank account or a dreaded unplanned bill, you know that stress isn't just mental. As a matter of fact, the survey cited earlier shows 28% of workers are stressed about finances while 25% are anxious. And in the insurance field, 88% feel stress. That stress left unchecked, that stress spills into how you talk with your clients or how you nurture relationships and how you treat yourself. It weakens your resilience and robs you of the joy that drew you into this profession in the first place. Women in particular are told to be grateful for their opportunities. Many internalize that producing is proof of success, but producing without protection, that sets up a trap. The more you earn, the more you fear losing it. And athletes too. They experience a similar phenomenon. Think about it. After years of scheduled games and structured training, entering a business environment with unpredictable pay, that can feel like stepping onto shifting sand. Why does this structure matter so much? Because structure turns income into stability. Without it, money flows in and out like the tide. But with it, money becomes a tool that serves you, your purpose, and everything that you're going after. So it's not just a metric, it's a metric that dictates your mood. When should you address this? In my humble opinion, I say before the volatility leaves you with no options. Many agents wait until a lull or a crisis forces them to rethink their finances. By then, panic sets in. Quick fixes replace thoughtful planning. Others assume a few good years will automatically lead to security. But research shows otherwise. There's research that actually shows that workers would accept a pay cut of 4 to 11% in order to enjoy income stability similar to salaried employees. And that trade-off suggests stability is priceless, worth more than a slightly bigger commission. For women balancing a career and a family, or for the athletes transitioning out of sports, the best time to build structure is right now, while your earning power is still strong. So Don't wait for the off season or for the next recession. Don't wait for the market to stabilize. Markets will always fluctuate. Stability comes from your choices, not external conditions. So if you're hearing this and thinking, well, look, I'm doing fine right now. Well, then I need you to consider this. 29% of workers have less than $500 for emergency. That means even a minor car repair could derail their budget. Planning ahead is not pessimistic, it's prudent. You want to be the agent whose lifestyle isn't vulnerable to a delayed commission check. What I want to do right now is I want to talk about a practical, generic, yet powerful framework. 4 steps to build structure around your income. It works whether you're a corporate employee, an entrepreneur, or a former athlete stepping into business. Step number 1, you have to clarify your purpose in numbers. Most agents know their commission rates, but not how those translate into monthly living expenses, reserves, or legacy goals. Begin by identifying your baseline, meaning what does it really cost to sustain your lifestyle? What are your fixed obligations? What are your dreams for 5 to 10 years down the road? Think of this as an athlete understanding their opponent. To win, you must know the playing field. You have to clarify what stability looks like for you. Peace of mind, not just a number on a statement. Step number 2, you got to create a cash flow system. Income is active, it comes and it goes, but a cash flow system ensures that what comes in has a direction before it is spent. This might include something like percentage allocation. Immediately allocate each commission into predetermined bucket, living expenses, taxes, emergency, reserve, giving, and investments. You have to do automatic separation. You want to use separate accounts or digital tools so the money for your taxes or savings isn't commingled with spending money. This protects you from budget blindness, where you forget what belongs where. This step is about discipline, not deprivation. What it's going to do is it's going to free you from making spending decisions in the heat of the moment. For athletes, think of it as the playbook that guides you where the ball goes. It turns raw talent into consistent wins. Step number 3, protect your income and legacy. Protection is about ensuring the systems you've already built. So for women, this often means overcoming the discomfort of discussing insurance or estate planning. For athletes, listen, this is going to mean you have to realize that your physical strength doesn't exempt you from financial vulnerabilities. I want you to consider disability and life insurance. Your income is tied to your ability to work. Protecting that ability ensures your lifestyle doesn't collapse if illness or injury occurs. Then we have to think about legal structures. If you're an entrepreneur, choosing the right business structure can shield your personal assets. Next, there's emergency funds. You want to build a reserve that covers at least 3 to 6 months of essential expenses. And this buffer transforms a slow month into a manageable lull instead of a crisis. This is so important as well. Guys, health and mental health support. The survey of insurance professionals found that 77% sought mental health support. So don't ignore your emotional resilience. Budget for therapy, coaching, or support groups. Protecting your mind is just as crucial, if not more, as protecting your bank account. Step number 4, multiply through education and legacy planning. Once you have clarity, a system, and protection, shift your focus to growth and legacy. This isn't just about investing money. It's about investing in your ability to generate value. When you're talking about continuous learning, markets evolve, laws change, clients' needs shift. Dedicate time each month to learn, whether through courses or mentorships or masterminds. Those who work with advisors are significantly more likely to have adequate emergency savings. Guidance matters. I want you to think about legacy and impact. You got to ask yourself, who benefits from the work beyond me? Legacy isn't only about leaving money to heirs. It's about building systems and training others and shaping the culture of your business. So when you operate from purpose, you attract and retain clients who share your values. I want to tell you guys a quick story. I once coached a former professional athlete, and I'm not going to tell you who he is, but they transitioned into the insurance space. And so in their first year, they outproduced many seasoned agents because their energy was magnetic and the clients absolutely loved them. But 6 months later, they were questioning whether they made the right move because every slow week felt like a failure and every commission check went straight into the day-to-day expenses. Why? Because there was no structure. So we had to sit down and we followed the 4 steps. They clarified their needs. We had them create separate accounts. We also had them purchase disability coverage, and then they started a modest investment plan. But the most transformative part was step 4, when they began mentoring young agents and sharing their story. And that shift from what if I lose momentum to how can I empower others gave them a sense of purpose beyond their numbers. And so today, they still earn good commissions, but they no longer feel like their emotions are tied to each deposit. And this is not an exception. This is what happens when you stop measuring success solely by output and start measuring it by stability and, most importantly, purpose and impact. Agents often pride themselves on being always on, but stability isn't the result of being busier or tougher. It's the result of building a foundation that holds when the winds change. If you've been feeling that quiet, unsettled voice even while producing, it's not a flaw. It's a signal that you're ready to step from agent to operator, from hustler to builder, from someone who runs fast to someone who builds a track others can run on. To the women listening who juggles deadlines and daycare, or to the athlete who's trading a playbook for a client list, or to the high performer who's tired of waking up anxious, you don't have to carry that burden alone. If this conversation stirs something in you, that's not by accident. For some of you, it's because you're realizing you don't just want another job. You want a career with structure, with purpose, and with longevity. You're drawn to the idea of becoming an agent, but you want to do it the right way. Not chasing commissions, not burning out, but building something that actually supports your life. If that's you, then I need you to go to insurelegacy.org, insurelegacy.org, and click the agent button. Now, for others, it's because you're already producing, maybe in insurance, maybe in another field. And you can feel that gap between income and stability. You're responsible, you're capable, but you want clarity around how to protect what you're building and how to make sure your lifestyle doesn't fall apart when shifts come. Either way, the starting point is going to be the same. I'm gonna need you to go to insurelegacy.org, insurelegacy.org, and click the client button. Now, that's where we're gonna walk you through your lifestyle continuation strategy. Now, this isn't a pitch, it's just a conversation. What we wanna do is we wanna take the time to understand where you are and what you're carrying and where you wanna go. If your path leads toward becoming an agent, we'll show you what it actually looks like to build with structure and support. But if your focus is protecting your income and your family as well as your future, then we'll help you design a strategy that brings calm where uncertainty has been living. Because clarity shouldn't come after a crisis. It should come before confusion ever takes root. And sometimes the smartest move isn't always doing more. It's getting aligned with the right framework as well as the right people. What I need you to do is take a deep breath and let's transform that unsettling feeling into grounded confidence. And when you're ready, we're here. We're ready to stand beside you, not to push you harder, but to help you stand taller. With that being said, run well, young lions and lionesses. Tony the Tycoon, I'm out.